Welcome to Season 8 of the FarrCast, bringing you insights into Wall Street, Washington, and the world. Now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It is the 14th day of November. Hey, we're getting close to Thanksgiving. Don't let it sneak up on you. I remember being in the TV station, one of the local TV stations 20 years ago, and they were running around in a panic like 3 days before Thanksgiving. Did you know it was Thanksgiving already? Has anybody got any B-roll? That means tape and footage of other Thanksgivings. They were shocked every year that Thanksgiving snuck up on them. You got to be kidding me. So anyway, it happens in TV. They spend so much attention day to day, they forget to hit the big points. It is the 14th day of November. Markets have been doing beautifully well up until the past day or so. Post-election, we've seen the S&P 500 go through 6,000, above 6,000 on the S&P. I participate in a number of different surveys. I participate in the bank rate survey every quarter, Market Maven bank rate survey. I've been doing it for years. And 3 or 4 months ago, they said, give us your goal for the S&P by June 2025. And so I looked and I said, well, let's go up 11%, maybe 12%. And I think I came up with something like 6,300 or so on the S&P, which looked like a huge, stupid number back then. Huge, stupid number. We're already above 6,000. It's November. Amazing. Interest rates heading higher. 10-year treasuries higher. 445. So the Fed cuts rates and the yields go up. Gold has come down. Gold's down like over 10% from its highs, maybe even a little bit more than that. If the government's doing all of this spending, isn't that ultimately going to be inflationary? I'm a little concerned. Oil has stayed low, $68 handle on oil. You don't see that if the economies are hot. That just doesn't happen. And the dollar has gotten a lot stronger. 105 to the euro. $1.05 buys you a euro. It was $1.09, 10, 11, a month ago. Amazing. And Bitcoin, of course, through the roof, above 90,000, now $91,000 per Bitcoin. Okay, what do? Disney beat its estimates, picked up some more video subscribers on the Disney Plus. Numbers coming in strong. What do we do when things are making an all-time high? We're seeing a bunch of cabinet appointments here. Matt Gaetz, oh my God, sent Washington rocking yesterday. Washington is rocking. We were all talking about John Thune as the new Senate Majority Leader for about 7.5 minutes until we heard about Matt Gaetz. And that was the end of that discussion. Tulsi Gabbard as the DNI, Director of National Intelligence. Oh boy. Who knew that Marco Rubio would be like the least controversial choice? I mean, Marco Rubio, okay, suddenly against that background, he makes complete reasonable sense as Secretary of State. Okay, great. You can't make it up. We're going to talk to Mahaffee today, but we're starting out with our buddy Kenny Polcari, of course, voice of the New York Stock Exchange forever, market strategist for Slate Stone. Welcome back, Kenny. Glad you're with us.
Oh, thanks for having me. I'm not sure how I even follow that introduction because it's passionate, but it is so true about things that investors just need to kind of consider in terms of what's happening all around them.
You know what? I'm going to be a little bit of a wingnut myself this morning, and let's start with gold because gold just got almost. I mean, it got close to like $2,800 an ounce. Did it ever trade $2,800 an ounce? It was close.
No, yeah, traded over. It traded like at 28.05. I think it was actually the higher 28.01.
Okay, 28.01 for gold. Now that's a huge price. It was a big move for gold. This has been a big move for gold in a year, and normally you think. Now, you normally think, well, that means that people, one of two things. When gold starts moving up, it's a fear trade, right? Or it's an inflation trade. And please, for God's sakes, don't, ladies and gentlemen, start telling me how much gold they use in weddings over in India and how many people they have in India. The demand for gold has never priced gold ever in my life. Okay. It's one of those two other things. It's a flight to safety or it's an inflation trade. If we had $1.8 trillion in deficit spending last year, and if the national debt is now above $36 trillion, why in the hell is gold traded back to 25.58?
Well, so I think here it is. First of all, gold, to your point, had a massive move this year. It was up 26 or 27%, which for gold is a huge, huge move in 1 year, right? So to your point, I think it was much more a fear trade and a safe haven trade as we moved into through the summer. We had, the escalating war in the Mideast continued to, create angst and nervousness. You had the ongoing Russia-Ukraine thing. You had a chaotic and contentious election. And so I think you saw this massive move into gold. You also had huge demand coming from foreign countries that, made it very clear that they want to increase their gold reserves. And so that certainly added to the support. But what we've seen happen since the election till today is that gold has pulled back about 11% on the idea, I think, now that the election is over and there's not a fight about it, it was very definitive, it is what it is. The GOP now has complete control that maybe the situations around the world, the geopolitical situations around the world will come under control as Trump has promised to try to end both those conflicts. So I think that's also helping. But look, we've had this massive move in the dollar, and we both know the inverse relationship between the dollar and commodities. Gold is a commodity. Oil is a commodity. Look at the BCOM index, which is the Bloomberg Commodity Index. That's also down 7%, and that includes everything. Soybean, sugar, coffee, lumber, wheat, live cattle, hogs, all that stuff. So the stronger dollar is affecting commodities. And I think that's what you're seeing partly in gold, but you're also seeing kind of a relief sell-off from now that the election's over.
Okay, this is why we talked to Polcari, ladies and gentlemen, because he just gave you two really good reasons, and that's what a seasoned vet does. So the two really good reasons that he just gave you were, hey, the damn thing moved probably too far, too high, got a little bit extended, and you're seeing a bit of a normal, should be expected pullback because things don't move in a straight line. It's got to settle in and find its own floor and pricing and go back to a trend line. That's absolutely true. And the other, and of course, the other thing is the dollar is up, and that means that fewer dollars purchase more goods and services. Fewer dollars. That means the dollar is stronger. That means, so when you travel overseas and you want to go to dinner in France, what was going to cost you $111 a month ago, you can now buy for $105. Same dinner, same bottle of wine, same everything. Fewer dollars go further, at least on the international scene and in commodities and other places. All right, Kenny, 6,000 on the S&P. This has been a great year. Hell, we've had a pretty good year this month. I mean, really. So a pretty good year this month. So what do you do as an investor? And do you reallocate when you look at all of the transition and uncertainty coming? Should you be raising cash? You and I don't like market timing.
No. So listen, I think first of all, two things. It took all of 3 days for the index, for the S&P to go from 5,900 to 6,000. In 3 days, we blasted through another century mark, right? That was number one, all on the excitement, kind of around the election and what was going to happen and all that stuff in terms of that. But now that you get here, you really kind of have to, once again, as a long-term investor, you have to take that long-term view. So you tweak the portfolio and kind of rebalance if anything has gotten out of balance? Sure, of course, because that's just normal kind of risk management in terms of portfolio construction and management, is that you should always tweak it. Things that get out of balance need to be rebalanced. How often you do it, whether you do it quarterly, annually, every 6 months, whatever. But you can certainly take a look. And there are things that are way overextended that I would not be chasing, right? Things like tech. Clearly, we've talked about it. While tech is great, AI is, the story of the future, you're already invested in it. You're in it. You're participating. So I wouldn't chase it. I would certainly buy tech on a pullback. And a pullback to me is like, an 8 to 10% pullback in some of these names, not a 2 or 3% pullback. I don't think that's a pullback at all. But I think it's just a matter of having your sights, long term. Remember that you're a long-term investor.
Do you do the same thing with commodities? I mean, if you look at gold, and we're not making a recommendation to buy or sell gold, ladies and gentlemen, we're not. But when you watch gold pull back, if gold pulls back 15% off a high, should a long-term investor say, wait a minute, there's a 15% pullback. Maybe the other side of our brain says, I want to go look at the technicals and look at a chart. And if it's back 15% and it's trading support and holds that for a while, I should put some money in a commodity like that. This is just an example, folks.
I think the answer to that question is yes, right? Because I also think that gold also acts as a hedge against inflation. And if you're worried about inflation ticking up again next year, which, by the way, there's all kinds of talk about it, right? Between tax policy, trade policy, immigration policy, fiscal spending.
There's a lot of spending getting ready to
a lot of spending,
a lot of
right?
spending.
And you look what's happening to the bond yields. They're kissing, 4.48%. It's not going to be soon before it starts kissing 5% once again. Wait.
Do you think yields? You think the 10 years going to 5?
I think the 10 years going to 5. Yeah, I think it's actually going to pierce 5, but I think
What's the chart say, Kenny? What's the chart say?
The chart, what do you mean, what's the chart say? It was traded at 5 in October of 23. It's since traded back. It's now traded up again ever since the election. Yields have gone straight up. While the Fed's telling you rates are going down, yields are telling you something else. And I think that's telling you either two things. Either the bond market thinks that the economy is strong and so it can support higher yields, or it's telling you that bond traders are afraid that inflation is going to rear its ugly head again. And if it does, that would be a reason that on a pullback, a 10 or 15% pullback in gold, absolutely, you would want to either add gold or add more gold if you already own it.
And what you mean by that is consider it, because we're just talking emotionally. That's not a recommendation. You just sort of consider a move like that, because that would fit with a discipline. That's a long-term investor's discipline. When a pullback of a certain percentage, you have to reassess. I'm going to throw in one more thing here. As you get to the end of a year like this, and you've got markets making new highs, take a look not only at where you've added risk to your portfolio, meaning some of these positions have gotten so big that they need to be trimmed. It's also a good time of year, with a month and a half to go in the year, to do tax loss selling. And you can sell a stock, and this is, I'm not giving tax advice. We don't provide tax or legal advice on the FarrCast, so check with your financial advisor. But you sell that loss, and you either just sell it, and you take that loss against capital gains, or you sell it, you can still take the loss, and you stay out of the stock for 31 days. You can repurchase it. And your risk is that it will be higher in 31 days than it is today. That's a risk, of course. Will it be higher than your cost basis? Well, I don't know. It depends how badly you know how much underwater you are in that stock. But you can help your tax situation a little bit here, and this is the time of year we typically do that. I don't know. What do you think about that, Kenny?
Yeah, no, I think that's right. And actually, I think a lot of that tax kind of that to your point, all that tax selling has already started. I think there are portfolio managers that are already starting to take advantage of that. We'll see it kind of heat up as we move closer to December, based on what the market will do. Are we going to get this year-end Santa Claus rally? I think we are, but I don't think it's going to be this dramatic rally. I think, if we end up staying right here in the low 6,000s, is probably where we're going to end. But I wouldn't be surprised if we saw the market pull back just a tiny bit. By the way, to fill that gap that was created in the S&P between November 5th and November 6th, where we have an 80-point gap on the chart in the S&P, that, I wouldn't be surprised to see us fill that gap and then rally into the end of the year. But to your point, it's always interesting this time of year to see what portfolio managers and big asset management firms are doing in terms of kind of tax loss harvesting and helping their clients take advantage of that.
Well, the other thing, Kenny, is that if you take a look at the tax loss selling and you're doing it at a time when the market's making new highs, it's not unreasonable to expect markets to go lower over the next 30 days. So that thing that's been sort of taking gas probably isn't going to be higher. Hell, if you still want to own it, you might be able to buy it back cheaper. I've gotten nailed on this both ways. You know how I mostly get nailed on tax loss selling in my own account, Kenny? I forget to look at the damn thing in 31 days. I sell it. I do. I sell it, and I sold it at a loss, and I've got this kind of like subconscious prejudice against it because I lost money on the stupid thing. And then I just don't look at it. And then I look at it in 6 months and it's back up again. And I go, oh, you're such an idiot, Farr. You said you were going to do it and you didn't follow your discipline. So,
okay, but that's where you need to depend on Harry. Harry will tell you in 31 days.
Oh, God help me.
Hello, knock, knock. right?
God help me. I'm depending on. You know what, ladies and gentlemen? I don't give Harry Jennings enough props. Harry Jennings well, I've known Harry for 40 years. We've been friends for 40 years. He's worked for Farr Miller, I don't know, 5 years, 6 years, 7 years. How many
8
years, Harry?
years.
8 years. Perfect. 8 years. 8 years in the FarrCast. We've been doing the FarrCast for 8 years. Harry Jennings makes it happen every week. Harry Jennings is there with data. Harry Jennings reaches out and schedules guests. I am nothing much more than Charlie McCarthy. There's an age test for you. And Harry's Edgar Bergen. And if anybody under 50 years old knows who the hell they are, I'm going to send them a free FarrCast hat. You let. All right, Polcari, you're the best.
Yes.
Please come back and see us. This has been great. Coming up, Mahaffee. Wonder what we're going to talk about this week. Oh, God help us when we come back on the FarrCast.
You can hear the sound of surf guitar, which means that it's time to go to Chicago, surf capital USA, and our good friend Dan Mahaffee. Now here's your host, Michael Farr.
Welcome back to the FarrCast. I'm Michael Farr. Joining us now with to go through a whole lot of news, Dan Mahaffee, Vice Chairman of the Dr. Scholl Foundation, scholar at the Center for the Study of the Presidency and Congress, a Washington, D.C. think tank, and our senior political analyst on the FarrCast now in season 8. Welcome back, Dan.
Thank you. Good morning, Michael. Great to be with you as always.
Glad to have you here. It looks like a pretty day in Chicago.
48 and foggy. Lovely November.
Perfect. 48 and foggy. That could be the title of this week's FarrCast, 48 and foggy. See if they get it. Okay. It should probably be 47 and foggy. 47 and foggy, you see, because Donald Trump's going to be the 47. Never mind. Okay. Dan, give us the headlines. Give us the top headlines we're looking at. We talked about some with Kenny, but go ahead.
Well, look, I think the biggest thing now is the cabinet picks. This is always the time where an administration, the transition's underway. We saw the 2 hours of a relatively cordial discussion between Biden and Trump yesterday. But it was followed by these cabinet.
How did that happen, and what did they talk about? I mean, look, this is. I mean, I'm going to make this. I don't know. This was a guy meeting, meaning guys can fight with each other over the years and say horrible things, and then go back and go, okay, hey, what do you want to do today? You want to play baseball? Let's go play baseball. And you don't have to like each other. We grew up doing that sort of stuff. But what in the hell did they talk about for 2 hours?
Well, I think a lot of it is the handoff on national security matters. Perhaps the outgoing administration lobbying to support Ukraine in some way, continuing that despite the campaign statements that Trump has made. Look, though, the national security question is somewhat undone, though, by some of the picks he's made later. Certainly the DNI pick of Tulsi Gabbard, and now the pick of Matt Gaetz has arrived into the Senate. New leader John Thune here is getting this, shall we say, gift wrapped with these controversial cabinet nominations that he's either going to have to shepherd through, and in many ways is an early test of just how independent some of these Republican members of the Senate will be in a second Trump administration.
So this was a red sweep now, and that is official. That the House will remain under Republican control. The Republican Speaker stays. Mike Johnson stays in place. We don't have to go through that, though Matt Gaetz probably wouldn't have voted for him because he didn't vote for anybody else. A deal's a deal, I guess. And then in the Senate, is John Thune's position as majority leader basically kind of the same thing as Speaker of the House? Is it the same kind of power and influence?
Look, some would say it's a more powerful position given the Senate's role, not only constitutionally, but if we look over the past really 8 years, the Senate has been somewhat the last remaining, air quotes, normal body among the organs of government. And therefore, they've been the ones responsible for where we've seen deals on the budget, Ukraine, funding, other matters going all the way back. It's really been the Senate where that's been done. So Thune is taking up the mantle of Mitch McConnell, who, love or hate him, will go down as one of the legendary managers of running that body. I don't think anyone ran it or had the institutional acumen like McConnell did. But in Thune, elected now, chosen by his peers to lead them. And I think he will be a very significant player. And if anything, this is a test because, look, Thune is a free trader. He's against tariffs. He's long been more of a traditional Republican on national security matters, vis-a-vis Russia and others. So a lot of this right away, I think, is testing him, Murkowski, McConnell, Collins, some of the other ones that we consider the centrist senators that, frankly, are going to have pause over some of these nominations.
So he was basically the more moderate choice of the three candidates, three names out there.
I would say there was not too much difference between.
Huh?
No, well, look at the candidates. There was he and John Cornyn, the two Johns, were considered the more moderate. Thune, perhaps the one with a little more media acumen. There was a late push at the end, particularly from outsiders and some affiliated with Trump, not Trump himself, pushing for Florida Senator Rick Scott at the last minute. Now, the Senate Majority Leader is elected by a secret ballot. So even though there was this lobbying perhaps for a more right-wing candidate at the very end, the senator still picked Thune.
And insiders here, folks, couple of different things. One, Rick Scott, personality-wise, is viewed as being kind of difficult on Capitol Hill. Not always the most charming fellow, according to those guys. That was a big problem with Kevin McCarthy too. He had left some scorched earth. There were people who really didn't like him. And if they don't like you personally, it's very hard to get elected. And politicians used to, I was telling Kenny, politicians used to have to be popular, right? They used to kiss babies. They used to shake hands. They used to say nice things to everybody so everybody loved them. I don't know what happened to those people, but I miss them. I don't care if they were phony. Be phony nice. I mean, phony nice is better than just completely not nice. If you can't actually do it, go ahead and fake it. But also, I said I was going to tell you two things. Tell us about that vote. Dan's actually going to tell us about the vote for Thune in the Senate.
So yeah, it's on a secret ballot, which allows a lot of the senators to vote their conscience and vote how they really feel, rather than how they're being pressured at the time. These secret nominations, though, are not going to be.
The nominations are not going to be. And secret ballot is the leader's position, majority leader's position, always a secret ballot?
Yes.
Always a secret ballot. Fine. So this was not any kind of an exception. Now, we have Marco Rubio for Secretary of State. We have Matt Gaetz for Attorney General. We have Tulsi Gabbard for DNI. Now, before we get to Matt Gaetz, let's go to Tulsi Gabbard. And this position,
heck of a drop off from Rubio to those other two. I think with Rubio, other than replacing the Senate seat, which that'll be up for DeSantis to decide, and how they handle that will be a bit of Florida drama. Rubio is going to be very strong on Cuba, on dictatorships, on human rights. So, there's not much a dispute, I think, with that pick, although there were others who were being talked about. But with Tulsi Gabbard, look, you have a person who, although the position is not necessarily running a specific agency like the CIA or NSA, you have someone there who is responsible for the coordination of intelligence products, the creation each day of the presidential daily brief, as well as finally the budgeting and coordination of those departments, planning their resources. Gabbard has made extremely controversial statements regarding Russia, regarding Ukraine, seen as pro-Putin. She's twice visited Assad in Damascus and Syria, one of the biggest butchers in the Middle East. So there's going to be a lot of questions about her pick. And one that I think questions whether President Trump is more concerned about revenge on agencies he think wronged him versus his responsibility as president to keep this country safe. Because when you have someone who is say a spy for the United States, risking their life. They could be a clerk in the Kremlin or a note taker in Beijing who gives secrets to the CIA or to make sure that they can get their kids over to the US at some point. You're thinking twice about that today when you hear that someone like Tulsi Gabbard is going to be in charge of our nation's intelligence.
Why? I mean, okay, so what I've said, what I told Polcari was this is a position that's not understood broadly by the American public. The DNI is a critical position. The DNI sees information and intelligence from all of the intelligence agencies, domestic and international. And the CIA is probably number two, depending on how you look at it, to the DNI, the head of the CIA.
Yeah, CIA is probably number two in resources and influence. You would say NSA is number two in just terms of raw intelligence gathered.
Yes. Okay. And yes. And but when you look at the folks there, these are quiet, studious folks. When George H.W. Bush was head of the CIA, you didn't see him doing interviews. You didn't see him being a politician. You saw him fulfilling a role of strategist, thinker, defender. It's more of a military role suited to his military background, of course, former president, late President Bush. And it's a different deal. This is critical, crucial, fragile information, volatile information, explosive information that has to be handled quietly and whispered about and thought about.
Because people are risking their lives to get you that
all
information.
over the world, all over the world. So let's see. Will she get confirmed?
Look, I think she's a question mark, but there's questions about how many of these nominations are planned on getting through. Is he planning on trying to get a recess appointment to use this to have the Senate adjourn, which it rarely does, into recess to nominate some of these people temporarily? Is it a negotiating tactic where he's putting out a few people to get shut down and start some sort of back and forth on his picks? We frankly don't know. We're going to have to see how this unfolds. Gabbard could very well get through simply because they have to hold their fire and go against someone who is more controversial, like this pick for Gates as Attorney General, given that there's already ongoing House investigations into him, his personal conduct, substance abuse, those types of things, as well as some sex scandals that are out there. So, look, that's a lot to be over the head of the Attorney General, but that is what Trump is looking for, is someone who feels and shares that perception of being wronged by the investigators. And therefore, again, the story is that Gates was the only one who came into the interviews for the position and said, I'm going to really clear out the Department of Justice.
Dan, you said that this might be a ploy, something that he just sends out there to get shot down. President Trump shoots over to get shot down, creates a big brouhaha over to give himself a stronger position to go to negotiate for.
Yeah, there's a little bit.
Actually wants. But wait, hang on. Have we seen Trump do that before? We've gotten to see Trump as president before, and we've seen him do some bombastic things. Have we ever seen him, or do you have an opinion, insight, that Trump has done anything strategically bombastic? It's hard for me to see his bombast as strategic. Do you have an example of a strategic bombast out of Trump?
Look, I think some of it where he's done on the Middle East negotiations, certainly, but never with his own cabinet picks and things of that nature. Some of it, look, he likes to portray on the international stage a certain crazy like a fox image to the other leaders. He even said it as much of the in his interview before the election. Why is Xi Jinping or Putin not going to do anything? Well, they both think I'm crazy. That's the way he's put forward. Is he doing the same now with the Washington establishment? Look, you saw when he was in his first term, he gave that very provocative speech in the CIA headquarters not long after his inauguration. And then ultimately in Trump world, look, this is, he's not president yet, but we're talking about him like he is. And that's really something that he sees in the media and is probably happy about too.
So we're talking about him like he's president, and yeah, and they had the meeting yesterday. Okay, so Of these picks, does it give you an idea of what the new administration and cabinet will look like? I mean, certain media, more of the liberal media, is suggesting that these folks don't have the experience for these positions. Clearly, that's not true about Marco Rubio. Senator Rubio does have the experience to become Secretary of State. So, what about the others, and what does it tell you about what you can expect from his
Well, we haven't even gotten
administration?
to Pete Hegseth over at the nomination for Defense Department. But what there is a common thread is so far, this seems like a cabinet designed to appear on Fox News primetime. These are all media savvy folks. They've all been useful surrogates for Trump throughout the campaign. They've long been pro-Trump. He sees them as loyal, and I see as effective casting, I think, for his media strategy of how he wants to communicate to his base, at least. That's the common image. Now, the
We've
other thing
heard.
I would say, though, is that they're all very keen on several of these hot button issues, be it DEI, diversity programs, particularly in some of these agencies. That's been something that they've heightened on the culture war issues. But for the voter who was there on the fence saying, is this going to lower prices and make me safer in a dangerous world? I don't think either any of these picks do any of that.
It looks like kind of a radical way to begin an administration, save Marco Rubio. I think he's had, final thing, Dan, only because I'm out of time. I could talk to you all day about this, and I think our listeners could listen all day about this, trying to understand it. And by the way, on Tuesday, I'm speaking at the CME annual conference, and I'm on the stage at 8:30 with Anthony Scaramucci for an hour, followed by George W. Bush on the stage. So I was talking to my buddy Marvin Bush the other day. I said, hey, I'm the opening act. I'm the opener. I'm the warm-up guy for your brother next week. He says, oh, lucky you. Tell him I said hi. And then he says, by the way, he doesn't need a warm-upper. That was good. But yeah, it's going to be very interesting to be there with Anthony Scaramucci on stage discussing his view of all this. But I'm sorry, Dan, if you want to throw a comment there, fine. But the thing I wanted to ask you about was we've heard that President-elect Trump has had 3 conversations already with Bibi Netanyahu. What do you make of that?
I think that Trump is trying to look at the first crisis that he is going to face, and the ongoing crisis is that war. But I think our realization has to be now with Trump, and look, we now also hear that former Governor Mike Huckabee will be the ambassador to Israel. That's his choice. So I think the questions are, one, how is this continuing conflict going to be prosecuted? What is the joint approach on Iran? And frankly, how do we work in an environment where I would say we're far closer, frankly, to having Israeli settlements built in Gaza than we are to seeing those hostages come home?
Dan Mahaffee, Vice Chairman of the Dr. Scholl Foundation, Center for the Study of the Presidency, Senior Political Analyst on the FarrCast. Thank you so much.
You're welcome, Michael. Thank you.
Coming up, Stephanie Link, Hightower Advisors equity strategist, and my great friend. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. We hope you're enjoying this week's edition of the FarrCast. Please share us with friends and colleagues. And now, back to your host, Michael Farr.
Welcome back to the FarrCast. I am Michael Farr. Joining me now, my great friend Stephanie Link. She is the Chief Investment Strategist for Hightower Advisors. You're not going to have a better colleague in this business, folks. And she was on the FarrCast before she was at Hightower, one of our all-time FarrCast fan faves. Stephanie, we're now in season 8. Can you believe it?
Wow.
Season 8. I know.
Right. Congratulations. That's terrific.
Thanks. Well, no, it's really stubbornness on my part and Harry's part. We just won't die. We just won't go away. But it's fun, and we get to talk to our friends, and we always learn a lot. Polcari and I, in the first segment, Stephanie, were saying, okay, markets now is S&P's above 6,000, 22 times earnings. There has been that sort of broadening out of market after that really narrow leadership of the Magnificent Seven. Not that they're really taking gas at all. They're kind of holding up. But other things are starting to go up too. And there are still opportunities in there in the market. But in general, when you see a market move this high and you're making new all-time highs coming into end of year, what are you thinking about as an investor? And what do we tell Fred and Ethel?
Well, and by the way, it's an honor to be on this podcast.
Thank you. It's an honor to have you.
It really is. And so thank you very, very much. Look, I think that you have to step back and always think about being diversified. You and I talk about that all the time. I'm actually very happy to see the broadening out in the market. Having 7 or 10 stocks dictate 90% of a move in an index is not healthy. And so I think you have to step back and say, why are we broadening out? Well, we're broadening out because the overall economy is actually hanging in there. It's up about 2.5% in terms of GDP, 2.5%, 3%, which is way stronger than most people expected. And you and I have talked about this. A year and a half ago, most people thought by now we would be in a recession. And we're not. We're seeing above trend growth. We are seeing stickier inflation, but it has come down. And I think most importantly, the consumer just won't quit. And the consumer just won't quit because they have jobs, wages are going higher, inflation is coming down, it's still high, and it's still up 20% cumulatively. I understand all that, but they have confidence. And when you see an ISM services number that we saw last month approach 60, 50 is expansion, it's near 60 with strong new orders. We have a consumer that is spending, and services we know is 75% of consumption, and the consumer is 70% of GDP. So that's really good. And then the second piece is this manufacturing renaissance that we have been talking about for a year and a half. And it's anything tied to, certainly it's AI, but it's data center, it's power, it's the grid. And that is actually fueling parts of the industrial part of the economy. And so I add it all up, and I can see 8 to 10% earnings growth. Earnings are actually getting revised a little bit higher. So do we have another year next year of 26% growth in the overall indices? I don't think so. The long-term average, you very well know, is 7.7%. So we have had now back-to-back years of 26% growth, and that's terrific. And that's good for people that are invested. But I do think that you have to be more selective at this point. And I am looking at some of the other sectors beyond tech. Tech is not dead, but beyond tech, financials, industrials, even energy, consumer discretionary, housing. And so the way I kind of look at investing is I think about themes, and then I try to find good companies that are priced well in terms of good values. And I can still find them, but it's much more selective.
It's much more selective. And by the way, one of the things that really good long-term investors do is we're patient. Yep. We don't have money burning a hole in our pockets. We never feel like our hair's on fire. Can you picture Warren Buffett running around waving his hands in the air going, I've got to buy something. I've got to buy something. No, you can't. And he's never done it. And both Stephanie and I know Mr. Buffett, and he would laugh pretty hard at that image that I just tossed out there. Stephanie, you said two things. One, I'm giving a speech on Tuesday, and Harry's gotten some data together for me. He always does, so I don't sound quite so stupid as I otherwise would. And one of the things he's done is he's looked at inflation and over the last 3 and 4 and 5 years versus wage inflation, and wages have exceeded inflation. And they have, and the greatest increase in wages is among the bottom 50% in this country. So the bottom 50% economically have seen greater wage growth than the other 50%, and it's kept up well ahead of prices. So that has not this time been the group that's been left behind, which I thought was fascinating. The other thing is, as you talk about that 8 to 10% earnings growth that you see, I'm also thinking about that report that came out of Goldman Sachs a few weeks ago, which frankly I went after, and I'll tell you why I went after it in a second, saying we'd have 3% earnings growth and market returns for about the next 10 years. Just I'm going to let you chime in on both of those, and I can tell you why I thought the 3% number, while mathematically I get it as a reversion to a mean, doesn't make any sense to me. But
I don't think it makes a lot of sense if the economy is growing above trend. So and that's why I put such an emphasis on parts of the economy. And if it's growing 2.5%, even if it's growing 2%, that's still above trend. In a 2% GDP world, you're going to see mid-single digit revenues. And at the same time, though, I think the margin story is so underappreciated. Everyone that I talk to for years and years and years have been saying to me, well, margins are going to roll over. Margins are going to roll. Margins actually have been expanding over the last 5 years. And that is, if you have mid-single digit revenues and you have margins that are, even if they hang in there and they slightly go higher, that's huge in terms of operating leverage, meaning that's good for earnings. And I think companies, especially US companies, have been great at keeping the margin story alive and well. If they have to, they will restructure. If they have to, they will cost cut. If they have to or they want to, they will increase price. So there's a lot of ways that they can navigate the margin story. And so that, to me, in a 2.5% GDP world, I think you can easily get to 8 to 10. Now, I think next year there are some expectations for 15% growth. I think that's aggressive. I really do. But under the Trump administration, it's supposedly going to be a continuation of better growth, maybe less government spending, but probably better business, private sector spending, which is very important and much, much healthier for the overall economy.
Okay. So let's wrap up, Steph, if we can. Advice to Fred and Ethel. Look, we had folks calling in, literally about a half dozen of them in tears the day after the election. Our Democratic clients, who are not fans of President Trump at all, are very upset, and they're very, very worried. And when I shared that even last week on the FarrCast, and I said we really need to try and be kind to each other, I got notes back telling me what idiots these people are. I mean, we can't be dismissive of each other. I don't understand why it's not okay for the other guy to have an opinion, even if even if it goes completely against your opinion. Fine. I mean, that's what we do in America. So as we think about folks who are upset, and it's our job, of course, to try to ignore all the noise in the marketplace and pay attention to the price of fish. Give us your best advice for Fred and Ethel coming into year end, please.
I have to say that I've never based on my investment decisions on anything political. I may agree with who's in office and what administration is doing what or whatnot, but I think it's so important to tune it out from an investment piece of the equation, and to find, as I mentioned, themes. So I said housing, I said grid and manufacturing, and AI, of course, cybersecurity, consumer discretionary, a consumer that just won't quit. And financials are also very interesting to me. India is very interesting to me if you want to go around the globe. And so I look at themes, and that's what I try to do. I tune out the noise, find themes, find companies based on those themes, and think much longer term. And you know what? Every once in a while, turn off the TV. I know that we want you to watch Michael and me, but turn it off if you get a little bit of anxiety. It's not worth it.
It's really not worth it. So have your themes, have your investment discipline, have a plan, and think long term. Over the next 10 years, all of this tends to wash away, and we return to those long term trends where we have expansion. We've got GDP that's growing, driving an expansion in the United States, and corporate America continues to grow. And as shareholders, that's how we benefit. That's how you keep up and ahead of inflation over time. And that's why we do what we do. And the toughest part is fighting our emotions and our fears and our greed and
Yes.
staying with a plan, staying disciplined. Talk to your advisors. And if you want to talk to a good one, talk to my friend Stephanie Link. Stephanie, thanks so much for being with us.
Thank you so much, Michael, and congratulations again.
Thank you very much. Season 8 of the FarrCast. That's it for another FarrCast, ladies and gentlemen, as we cover Wall Street, Washington, and the world. We will be back again next week to give you some insights and context and background to help you think about the world, markets, your investments, and the economy a little bit better. For Harry Jennings, our producer, everybody at Farr Miller and Washington Hightower Advisors, thanks for listening. We'll see you again next week. I'm Michael Farr.
Thanks for joining us this week on the FarrCast, and thanks to our guests, Kenny Polcari, Dan Mahaffee, and special guest, Stephanie Link. We'll be back with you next week with more from Wall Street, Washington, and the world, and our scheduled special guest, Bryn Talkington. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. In tumultuous times, here at Farr Miller in Washington, we stay focused on dispassionate analysis and dogged research to serve our clients' interests and to help them reach their investment goals, no matter what the political and economic winds may bring. If we can be of assistance, please don't hesitate to reach out to me at hjennings@farrmiller.com. I'll be happy to put you in touch with one of our investment professionals to help you navigate your financial course. We are grateful for all of your notes and comments, and we try to respond to as many as we can. Please keep the emails and messages coming. Take care, stay safe, stay healthy. We'll be back with you next week on the FarrCast, Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC, or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC, or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.